Today we're going to talk about how we turned $300,000 into $2.7 million with our very first 24-unit apartment complex. Hey guys, my name is Ariane and this is my better half Chris. We created this channel so good people like you can learn how to also become financially free. So we're actually in the middle of our series of where we talk about how we went from broke college students to becoming financially free at the age of 27, and we pretty much did it through buying this 24-unit apartment complex. So if you watched the previous video, we talked about how we found the deal, how we financed the deal, and then now we're talking about the numbers and what actually happened after 3 years. So Chris is going to talk about the 2018 plan, and then I'll talk about what happened in 2021.
All right, so we bought this property for $1.3 million. That was $54,000 a unit. We planned for $120,000 in renovations, but we did not set that money aside ahead of time. We actually funded those renovations from the cash flow. So this property actually only took $325,000 out of pocket, which was the 25% down payment from our conventional loans. We kind of hinted at this property was generating about $10,000 a month in cash flow for us when we purchased it. And that first year of cash flow was what was used to renovate these units. As a spoiler though, we were able to use bonus depreciation. Ask your CPA how you can use depreciation from real estate to help lower your tax burden. So we ended up saving that year $130,000 in taxes, which kind of replaced that income that we were using from the property.
We actually have a whole set of videos to talk about this tax benefits with real estate and bonus depreciation. So we'll link that up here and in the description below if you want to check that out.
All right, so 2018 numbers. When we bought this property, the average rents were $600 a month, which was pretty low for our market. Just looking at comparables, even a basic like Zillow search, that kind of degree of comparables, showed that we should be able to get $850 a month. So that was what we were targeting for our market rent after we did our renovations. Once we were able to get it to that $850 a month, the property was stabilized, cash flowing $10,000 a month for us, which was enough to replace my salary and retire. Banzai!
Yeah, so that's pretty much where, this is how we retired at the age of 27. So.
Yeah. So this property was the one that caught us all up and was able to give us that passive income that allowed us to take the leap away from the day jobs. And again, our goal for this property was to refinance and get our money back. So our target valuation for this property after we were done was going to be about $1.8 million, which would allow us to refinance back our initial capital and the renovation costs.
So that was the plan back in 2018, and now I'm going to talk about what actually happened. So in 2021, the average rent actually was $1,200 a month. So instead of $850, we were averaging $1,200 a month, which is crazy. Market rent at that time was actually $1,390. And we did a refinance in 2021. So we did a 70% loan to value refinance. The property appraised for $4 million. So over $2 million more than our original planned $1.8 million. We pulled out $1.8 million tax-free because of that refinance, which is $1.5 million more than our initial investment. So even after pulling out that $1.8 million tax-free, we still have $1.2 million in equity because we only have a 70% loan-to-value loan. And the property still cash flows $10,000 a month after all that. So that is pretty crazy. And today, the crazy thing is the market rent is actually $1,600 a month. So the cash flow continues to grow and equity continues to grow. And we still enjoy the tax benefits, which is pretty cool.
Yep, so just a quick recap. I know there's a lot of numbers we threw at you there. So when we bought the property, average rents were $600 a month. We were aiming for $850 a month by the time 2021 rolled around, but it turned out to be $1,200. And now this year, our market rents in the same area, same units, are now $1,600 a month. In addition, we bought this property for $1.3 million, targeting that roughly $2 million valuation for the refinance. By 2021, it actually ended up being $4 million, so we got way better than expected there. Cash flow, when we started this property, once we got it stabilized at the $850 a month, it was cash flowing $10,000 a month. By the time we did the refinance, it was cash flowing $25,000 a month. But when we got our new loan after the refinance, our cash flow dropped because now we have a much bigger loan, so there's a bigger loan payment. So the net cash flow to us at the end didn't really change much now that we've had the extra refinance loan proceeds. So what we did was we turned $300,000 into $2.7 million, plus the extra $10,000 a month in cash flow. So we didn't lose that in exchange for this $2.7 million. And that cash flow will continue for as long as we run this property, which is much different than our previous occupation, which was flipping houses.
Yeah, so we got all our $300K back from that refi, and we have $1.5 million extra tax-free, and we still have $1.2 million in equity and $10,000 a month in cash flow, which is amazing. This 124 unit, we probably made more in this 124 unit than the 3 years we did flipping houses.
Yeah, that was not... What were we thinking?
So now we're going to talk about the lessons learned in the next slide.
Yep, so what we learned in this thing, we've probably said this in another video somewhere or another, but we're pretty risk-averse people. So before we were going to raise anybody else's money to do this, like they always teach in all the guru courses, we had to prove the concept for ourselves. So when we started this, we did not know that buying multifamily was actually real. Turns out it was. We can actually do this, and that was one of our very first lessons, that this is actually possible.
The second thing we learned is we want to aim for singles and doubles because they can turn into home runs. So what I mean by this is back in 2018, when we initially looked at this deal, like you saw, we didn't know that we were going to make an extra $2 million on top of what we projected. We just thought, hey, we're going to buy this deal. It looks okay. The risk reward return is okay, and then in 3 years maybe we get all our money back, but we're gonna cash flow until then. Well, as you saw, it's a crazy home run deal, but we didn't plan for that, right? We didn't know that was gonna happen. So the lesson here is you don't really know what's gonna happen later. You just wanna mitigate your risk and take the single or double when it's presented to you, right? Like this was just an okay deal, not a home run deal when we bought it in 2018, but eventually it paid off. So if you're looking at deals right now, don't wait for like the perfect home run deal.
And if you wait for the home run, that's easy to see as a home run. 12 other people saw it was a home run and already took it, so you missed out. Or it may never come, and that's the worst.
Yeah, and we see so many people that just wait and wait and wait forever because they want this crazy home run deal, and then years pass them by and they never got started investing. So don't be that person.
Next thing we learned here is kind of related to that. Real estate goes up with inflation. So as the value of a dollar decreases, it takes more of them to equal the same value of the house. So in this case, our apartment building was actually worth more in an absolute dollar amount sense because the dollars themselves were worth less. So our valuation went very high, which allowed us to refinance out the debt that we had taken against it.
And our next point is cash flow is so much better than active income. I think we said it earlier. We made more on this one deal, than the 3 years we did flipping houses when we got all distracted, right? Which is...
It's good and bad.
Now that I say it, I feel really bad about it, right? But hey, you know, you don't know what you don't know. We eventually found out. But the cash flow pays you even when you sleep, when you're on vacation. In 2019, we were away for like 3 months. We went to the Philippines and New Zealand and Hawaii and Australia, and we brought our family there and we were like traveling with them. And this property was still paying us. Like it was amazing. When that happened to our active businesses, the businesses didn't do very well, right? I mean, they were working, but you know, like they weren't cash flowing anymore. Because it needed a lot of like time and attention from us. This property taught us that when we do expend our active time, we want it to be put towards something that generates us cash flow forever, for life. Which actually leads us to our next video where we're going to talk about syndications and how we got started in investing passively in syndications and how now we lead our own syndications, right? Like we put together the syndications, put our money in, and then other people invest with us. So we're going to talk about why we started doing our own, even though we prefer to be passive investors. And I'll give you a little hint, it's because most syndicators don't actually structure deals where you get cash flow for life. They usually flip apartment buildings, right? Which we were exiting the flipping business.
We didn't want to do that anymore.
We didn't want to just go into apartments to flip them again, right? We wanted actual cash flow, actual passive income, and tax benefits that last 10, 20, 30 years, ideally for life. We are only in our 30s, right? Like we're going to live for longer than, 10 years. So we want it to actually pay us for a really long time. So if you want to listen to that next video, make sure you click that subscribe button, click the notification bell so you can be the first one to listen to our next videos. If you like this one, please click the like button. It shows us that you liked it, and I think it helps the YouTube algorithm. We also have a lot of other free resources, so check out our other videos on this channel. We have a free Facebook group called Faster Financial Freedom, where you can network with other people who are on the path to financial freedom as well. Okay guys, thank you so much for watching this, and we will see you next time.